You could lose thousands if you wait to sell your house after a divorce. And in this video, we are going to talk about capital gains tax and how it can affect your bottom line depending on when you sell your house during a divorce. And we have a very special guest, Tabitha Johnson, CPA and owner of Perfect Peace Accounting. She is going to give us all of the details on capital gains tax, and she's even going to give her recommendations on when to sell your house during a divorce. So you definitely want to keep watching until the end. It's going to be good. Now, I help divorcing couples sell their real estate, and I'm all about educating my clients, which is why we have Tabitha here. And honestly, many divorcing couples don't think about capital gains tax when selling because they're so overwhelmed with many other things, and it's probably the last thing on their minds. But this is important information and you need to know it nonetheless. So let's jump into it. Miss Tabitha, first of all, thank you for coming on the show. I appreciate it.
Thank you for the invite.
Yes, of course. So for all of us who don't understand, because we all know taxes can be such a complicated process and thing and stressful for some of us, but please explain capital gains tax. Like, what is capital gains tax?
Yes. So capital gains occur when the monetary difference between the amount received is larger than the amount spent when you sell an asset. So what does that mean? For example, if you bought a house for if you bought a house for $100,000 and you sold it for $200,000, your capital gain would be $100,000, which is the difference between the two amounts.
Okay, so it sounds like with capital gains tax, you're taxed on that difference between what you bought it for and then what you're selling it for, or what you sold it for.
That is correct. So
okay,
the IRS can assess up to 20% of your capital gains. So in our previous example, you could potentially pay $20,000, which is 20% of the capital gains that you have when you sold your house.
Wow, that is a lot of money.
Yes.
So talk to us about, because I have very limited information or knowledge, because it's not my expertise, and I really believe staying in my lane. So talk to us about like this. Okay, so we know that the capital gains tax is there. Are there exclusions? How can taxpayers be excluded from paying the capital gains tax?
Absolutely. So the IRS does allow us to exclude a portion of our capital gains.
Okay.
Based solely off of your filing status. So for married couples, you can exclude up to $500,000. And for singles, it is half of that, which is $250,000.
Oh, wow. Okay.
Yeah.
So there's a difference between if you file single and if you filed married. Now, is there a difference when you file married but single? Because I know with married couples, they can either file married jointly or married
filing separately.
So does that $500,000 fall under that?
No.
Oh,
so
okay.
married filing separately, you are counted as single. So you will get the max is $250,000 that you can have.
Okay.
So it's married filing jointly gets the $500,000, and any other filing status would be the $250,000.
So it sounds like if you're married, filing married and jointly is definitely a money saver.
Yes, it is.
So talk to us about like the strategies. What are the strategies to minimize the capital gains tax?
So the good news is that there are many strategies that will allow you to minimize your tax to potentially zero.
Oh, wow.
So the first is you have to live in your home 2 years out of a 5-year period. The second is if you have any upgrades to the house, you definitely want to gather those receipts and calculate that, because you can include those amounts into your purchase price, which makes the capital gains smaller.
Oh, wow.
Yes.
Does that include repairs as well, or is it just upgrading?
Upgrading.
Oh, okay.
Yes.
That's good. That's some good stuff.
Also, everyone gets, when they sell a home, they will get a settlement statement from the title company. You make sure that you keep that, because the amount that you have to sell your home, the expenses, it can also be included on the purchase price to make your capital gains appear smaller.
Oh, wow. Okay.
Yes.
Some great tips and tricks. Because we're all, I mean, at the end of the day, I think, if not most, but all of us, some of us maybe, are looking for ways to reduce our taxes. And so this sounds like it's a great strategy, but you kind of have to be organized and
keep your documents. Yes, especially when you're selling your home.
Yeah, yes, for sure. Because that information would need to be submitted. Does it need to be submitted when you with your documents when you file, or is it just a matter of putting that information on the necessary forms?
So when you file, so you want to give that to your tax professional so that they can put all of those costs in and include that with your purchase price.
Oh, okay.
Yes.
Good stuff. So now we're all talking about divorcing couples, and I'm always, like I mentioned earlier in the video, I'm all about educating my clients or potential clients, and especially those who are facing a divorce, because it can be a very stressful and challenging time. Keeping in mind that they are probably not thinking about their taxes, right? They're just have so many other things on their mind and a lot of things going on.
Yes.
So how can someone or a couple that is unfortunately going their separate ways, divorcing, what can they do to help minimize their tax bill?
Yes. So of course, so what you really want to do is not sell your home at the same time that you are finalizing your divorce, because your filing status is determined on the last day of the year. So what that means is, if you finalize your divorce in July, your filing status at the end of the year would be single. So that reduces that down to that $250,000. So it's best to sell your home before your divorce is finalized, so that you can utilize that whole $500,000 exclusion.
Okay, so selling the house, if you're going through a divorce, selling your house before the house is finalized.
The divorce is finalized.
I'm sorry, before.
Yes.
Sorry, before the divorce is finalized is the best way to go.
Yes.
Provided that you are staying within the boundaries of your divorce decree.
That is correct.
Yeah.
That is correct. So before that is finalized, and not only that, if you sell a home and the divorce, it can complicate the tax return, which adds additional costs to complete the tax return. So it is best that you sell the home and then make sure that you're within the divorce decree that is finalized after the house is sold.
Okay. Yes, because I was thinking of a particular client that I helped sell their house. They were unfortunately going through a divorce, and within their decree, they had to get the house on the market within a certain amount of time. I believe it was like 60 days or 90 days. So they had to get their house listed for sale, not necessarily sell it, but they did have to get their house on the market, listed on the market within a certain amount of time frame. So there are some other moving parts along with this. We do recommend that you speak with your attorney or get some legal advice. Just ensure that you are following the law and you're following the decree. But this is some great information. Yes. So let me ask you this. So, because you've been an accountant for a very long time.
Yes.
Yeah. So
over 20 years.
Over 20 years. So she has a wealth of knowledge and experience, and to be honest with you, she helped us with our taxes, and she is just so very detailed and just so very organized, and I highly recommend her, by the way, and I'm going to leave her contact information in the description box because it is tax season, right? What is a common mistake or something common that you see with married couples who are divorcing when it comes to filing their taxes?
So the most common is not keeping the documentation. So when you don't have the documentation, your tax professional cannot include that cost. And every dollar counts. Every dollar counts. So if you did not keep that documentation, your exclusion could potentially be lower or higher, depending on what expenses we put in.
I see. So is it possible if you have a situation like that where a piece of document is missing and they file, is there like an amendment that can happen? Or what are the options if, you know, a divorcing couple stumbles across this document that they forgot to include when they, you know, when they were filing taxes? So what are their options?
So great question. So you do have 3 years to amend your tax return. So if anything is forgotten, you can certainly go back and ask to amend your document up to 3 years. And so that's highly recommended if something else comes up. And then you potentially could get a refund from the government.
Oh, okay.
Yeah.
Now, is there an additional fee with that, as it comes with the IRS? Not with your tax preparer or your accountant, but is there a fee for filing an amendment?
Not with the IRS.
Oh,
no,
okay.
No, so if you do it yourself, then yeah, it's just it's an amendment. But there would be an additional fee if you hire a professional to do it.
Okay. Yeah. Wow, what's some great information. So basically, it sounds like for you couples out there that are unfortunately going your separate ways, and you have a real estate that you need to sell it. Don't sell the house the same year that the divorce is finalized.
That is correct.
So now that makes me think of the last question. What if a couple has like a second property or income property, or they have a portfolio of properties? How does that work?
So it works the same way. Those exclusions, the exclusions are on your primary house. So, but it will make things more complicated on the tax return. So it's best to, if you're not going to finalize, to negotiate with your ex and make sure that it's split, or you can buy out properties. There's many options, but that takes the negotiation part between the two partners.
Yeah.
Yes.
So the capital gains exclusion would not apply for income properties or rental properties or any other properties. It's only for primary properties. Is that correct?
That is correct.
Okay. So if you do have rental properties or a second home, then like Tabitha said, that's where it comes down to negotiating. And you definitely would want your lawyer to help you with that information or help you with that process. And so, Tabitha, please tell us, how can our viewers get a hold of you?
Yes, so you can call me at 623-877-1573, or you can go to my website and schedule a meeting at perfectpeaceacctg.com.
Great, and I'll make sure that information is below in the description box. And earlier I mentioned that it's tax time, and so I know this is probably a busy time for you, but do you consult throughout the year as well?
I do.
Okay.
I do. So you can reach out, you can call, and you can also schedule an appointment anytime.
Awesome. Well, thank you again for joining us. And again, I'll put her contact information in the description box below. I'm Renee the Realtor. She is Miss Tabitha Johnson, CPA. Thank you so much for tuning in, and we'll see you in the next video.
Thank you.